This is Randy Finney with Right Side of the Chart, and today is Friday, March 8th, 2019. As we head into the middle of the session here, well, it's still morning, it's about 11:30 a.m., so we're a couple hours into it. I wanted to do a video, get it out there for subscribers, kind of share my thoughts on the market, what to look for as we head into the weekend, and most importantly, what I believe to probably be, well, without a doubt, I believe to be the single biggest technical development right now, both today as well as in really for months now. And what that is are some developments on the weekly charts. Now, if you recall, for the last several weeks, I've been living in the world of the intraday charts. We're focusing on short-term 60-minute charts, looking at breakdowns, trying to hone down an entry on a short trade. We had a couple that didn't pan out. We kept those losses small in those and just kept chugging away because the charts continued to confirm particularly what was going on the daily charts. But you use the 60-minute charts to, or at least I do, to try to hone down my entries and exits. So, for example, on the QQQ trade, we'll just start there. We broke this trend line here. We came down. We hit that first support the other day, had a reaction there, and then gap below it. That was yesterday. Gap below it. Now we're coming back. So, there's a couple takeaways I wanted to get out there in this video. Is, they're going to, as I said in the trading room today, the market is pretty extended, meaning oversold in the short term, not on the daily charts, not on the weeklies, but in the near term. And nothing goes down forever. And also remember that when you're coming off such a powerful uptrend, and the MO for many, at least in the last few weeks, has been buy the dip, buy the dip, buy the dip. So you're going to get that. So I wanted to talk a little on the short trades, and I'll kind of carry over into that when I look at the weekly charts here in a second, the daily charts. But you have to define, your time frame, your trading style, and identify your targets, have a plan, stick with it. S1, on a lot of official trades, I'll list S1, sometimes S2. That means support, first support, second support. And those are levels that you can book profits. They're a level I expect a reaction, or I wouldn't list it as such. But then I don't think that there was enough meat on that trade. It wasn't a big enough profit to hit S1 and take profits. At least not for me. I still think these targets are very likely. But you'll have to define that and stick with your trading plan. But I can tell you, they're not going to make it easy on you. When I say they, I'm speaking metaphorically. It's whether it's nefarious forces in the market, which there are certainly some of those. Try to stop raids, things like that, from market makers and high frequency trading firms, algos. But more so, it's the increased volatility. Let's just keep it simple. Let's back out the dark forces, and there's going to be volatility. There are still other people on the other side of the trade that believe this market is going to new highs, or even in the near term that this is a great buying up. Maybe they'll prove to be right, maybe not. That's not my mindset right now, but the point I'm trying to make is it's like that movie Taken, with Liam Neeson, when they, his daughter, they come in, the bad guys come in the hotel room, and she's under the bed, and she's telling her dad what's going on. He says, I want you to listen to me carefully. They're going to take you now. Well, they're going to try to take your stops, and, if you're of the mindset, if you're happy with quick profits, book your profits or set your stops, because there are no guarantees, just like we saw with the last couple trades, that this one will pay out. Those others started getting going like this, but I'll just tell you on QQQ, 171 is pretty significant resistance. It was support before. Now there's also the top of yesterday's gap. That would be your next logical spot. And what they usually try to do is pop those levels a little bit, because people either have their stops placed right above 171 or right above the top of the gap. Again, if you want looking for levels, you can also put a near-term downtrend line like that. I think it's almost natural. The longer you trade, you learn to overcome this urge, but it is to after you've had a series, I know there's been quite a few people, the same mindset I've been lately, trying to, game some short pullbacks, short trades, and they haven't panned out, or they were good for only little small gains. So you get in that mindset, well, that's all that's going to work forever, so I might as well book profits. Why have them? Well, if you're doing that, and if you're allowing 2, 3, 4% losses on your shorts, you have a string of those, but then you're only booking profits, 2, 3% on the downside. When you finally get one right, you're not gonna move forward. You're gonna go backwards trading. You have to take things with attractive RRs. If you were allowing 2-3% losses on the other two, you need to allow for at least on the same trade, a 8-10% profit potential, which I think is still in a lot of these trades, and maybe more. So that's the near term. I'll get back to the other trades in a second if there's time, but let's just again talk about what's most important. So for weeks now, I've been focusing largely on the 60-minute charts, turning my focus lately a little bit more, almost every day now, to daily charts. Oh, that's QQQ. Let me give you, well, again, because we had resistance there and we started to have some developments. Now, the reason I was living in the world of the 60-minute charts was, as I talked about, this is where the strong gains were in this run, and even in here we had a breakout and some strong gains. But then, as I've talked about, volatility momentum has been waning, and volatility has been compressing, just like it was here, just like it was at the top leading up to the first leg down in 28 right here. And so therefore there's no reason to look at the weekly charts on a daily basis. It's not going to change. Nothing's going to change on those candles. However, today, and this is the primary point of this video, if you take nothing else, and you can end the video after this, here's what we have now today. This is a weekly chart, QQQ. I'll get to SPY in a second. We have unmistakable bearish engulfing candles on the weekly time frame. Anything is possible, but the odds of them ramping the market high enough today to undo this, even if these candles close up here, the only criteria for bearish engulfing is you have to, first of all, don't look for them in the middle of a trend or right after a correction has started. You look for them at the top, right near the top of an extended uptrend or bullish trend. And then you just have to engulf the previous day's body of the candle, not the whole candle, just the body. Now, the more you engulf, the better. I like to use it slang, I know it, but the redder the better. That's what we're looking for today, guys. The redder the better. Right now, this was a low so far. They've rallied it up a little bit. If you can close there, right now, in fact, we've wiped out the previous 2 weeks of trading. So everybody that bought in the last 2 weeks are underwater. And keep in mind, too, this is how technical analysis works. It's not just some magical voodoo looking at candles and it works because it works. No, it's psychology. There's a big part of it. It's showing you the story. This is a whole storyline right here of buyers and sellers, where they've interacted, what they've done at different price levels. So this is telling me that anybody who bought in the last 2 weeks is now underwater in QQQ. And if we can close down, a little farther today, then we've engulfed the last 3 weeks. And so that's why I'm saying the redder the better. And couple things to that. Just like I had said on the recent bearish engulfing candles on the daily, yes, it will certainly help, and you do want to see confirmation. But number one, I didn't mention this candle earlier because it doesn't matter what happens during the week, and all that matters is how this closes the week. But again, as I'm doing this now because we will get these red candles today, barring some crazy 3% plus rally into the close from where we're at right now. Very unlikely. So then again, you'll some point today, or maybe after the market closes today, you'll watch this video. So again, follow through. The redder the better if we get follow through candles. Otherwise, the bulls still could next week put a big green candle here, and then that really means nothing. So in my book, again, this is my book, I want to see confirmation. I can tell you this is a heck of a start. Why? Big red bearish engulfing candles, they don't come often. I'm zooming back. This is going back a decade right here. And you can look. You don't see these candles often. And when you get them, and most importantly, when you get them at the end of an extended uptrend like you had right here. Let's see, when was the last bearish engulfing candle? Right there. And I'm talking again at the end of an uptrend. At that point, even if you waited to the end of the week and then got out of your foreign key, you saw as you were heading into the close, you have till 4 p.m. or 3:50, whatever your broker says to get those orders in, your IRA money, that kind of stuff. You got out, you sidestepped a 20-something% loss down to the bottom right there from that point. So again, heed those warnings. This one wasn't a bearish engulfing, but again, you don't get big red candles like this. Where do you see them on the weekly? You see them either at the top, at the beginning of a correction, like here, or during the correction. So again, this is pretty bearish stuff here. You had one there. It wasn't a bearish engulfing. It was close, but it wasn't a bearish engulfing. And most importantly, as I say, nothing's 100% perfect. And the other thing I say is you want to see follow through confirmation. You had another red candle there, but again, it wasn't a bearish engulfing. And yeah, so let's look at SPY. SPY, I mean, that's just a big fat bearish engulfing. And so the point I guess I'm trying to drive home is the intraday rips and dips can drive you crazy. I'm just going to tell you what I'm doing, and don't follow me. You do your own trading, take your own trades, you decide where you enter, where you exit, how much you put in. But I can just tell you that as far as a core short position, I'll trade around that all day long, but core shorts, some of the shorts that I've added recently, and I've had some for a couple weeks now, they will stay with me until and unless this candle is taken out. We move above the highs, and that would have to happen next week or sometime thereafter. And if we get additional confirmation next week with another red candle, we'll probably increase that core short, exposure, and because that will further increase the odds that we're going to drop. I have my next downside targets about another, I think on QQQ about 25% down from below where we recently topped. So I'm looking at drops of 20+% on the indexes. There is still work to be done. Let's not get too far ahead of ourselves, and do not, take this for as a, done deal or nail in the coffin type thing, because you still have this key support right here. So remember, I talked about that in recent videos, my WTF zone. And so at this point in time, even though these are bearish engulfs, they may lead to a nice correction, but this anywhere in here is the case for the bulls, and the case for new highs in the market in 2018, and a continuation of this, this great bull market that started back in 2009. It's this level. That's where the waterfall selling will start. So okay, so just to run through, and I'll just go through the short trades, and those that are, and all the short trades right now are related to indexes. I'm gonna, if we get some additional confirmation over the weekend, I'll probably start to comb through some watch lists and see if we can find some individual stocks. It's been sticking with the index ETFs because that's number one. It's easy. You don't have earnings to worry about, and when you get volatility moves, if we get back to where we were, as you saw last quarter. Even the beginning, after when the rally started, the indexes, when volatility comes back in, can move up and down 3% in a day, and you can make 10% in just a few weeks. So they're well worth trading. And again, it's the simplicity, the liquidity. There's a lot of check marks to trading them when the time is right. So, but just to kind of recap. Oops, hit the pause button. Recap where we are here. It's right there. SPY is struggling with this 273-ish support. We had those flags yesterday. They broke down impulsively, and ideally now we've had a little bit of a pause here so far today, but you also had a little bit of a pause here along the way, and that was really the flagpole. So this is certainly still open to the possibility we come on down. And again, as I said earlier on the weekly charts, I believe I said it's slang. The redder, the better on those weekly candlesticks. So if this happens today, I can make no promises to you. I can just tell you that in my opinion, and this is the close down here, we come down and hit this gap or worse, and this flag plays out like this into the close today, that red candle will be even larger. It will probably have taken out the 3 weeks like I showed you on SPY, the previous 3 weeks, and it will give an additional check mark to the longer term bearish case, my primary scenario, which says this was a bear market rally. And again, even if the odds are not better than 50%, I'm not going to try to quantify them for you now. I can just tell you that's my preferred scenario. Even if they're not, the amount of gain potential for another 20+% drop in the market is tremendous. So what I'm doing is I'm giving those core short positions a little more room. And again, I know there's been a lot of angst in the trading room, people feeling pain in the last few weeks, but remember the markets haven't been going up or down much, and so what that is probably indicative of is you're putting too much into any one trade, too much of your portfolio into any one trade. So I'm just trying to share tips that I've learned over the years. I've been squeezed out of trades that I was too heavy in, because when they start going against you, you're feeling the pain. So the old saying is sell down, or close out to the position, to the level which you can sleep at night. And if you're trying to hit a home run or a grand slam, which is still a possibility, you're going to need to have a position that you're okay with. If they kick this market back and make it look like it's going up, try to run the stops on the shorts. And again, be open to anything. This could be just a correction on the way to new highs right now. It could be nothing more than that. I don't think so with those bearish engulfing weeklies. Like I said, that gives additional validation to the longer term bearish case, but we'll see. And they still haven't been confirmed, and we won't know if they're confirmed until the end of next week. So again, this is not an all-in short moment, but it is, again, it does, in my opinion, open the door for more downside next week, regardless of what happens today. Here's the next target on SPY, roughly about 266.50, and then this would be, and then you'd be getting down towards that bottom of that, or the beginning of that WTF zone if we get much below here. So those are levels to trade off of. Let's look at QQQ because that's an active trade. QQQ had pretty good support. Remember, I labeled this S1 as first support at 171. We're below it now, and I think I may have already covered that earlier, didn't I? Back test right there would be a possibility. That would be an objective short entry. So although I can't promise what is going to happen, I can tell you this, that ideally for the bears, they want to keep QQQ under 171. So that would be an objective shorting up, plus you have this minor downtrend line coming in here. That would be the ideal scenario, and that would also be an objective short anywhere around there. Whereas a pop above there, especially a 60-minute close, could open the door for an additional rally. So it's just something to watch right now. So we'll keep an eye on those levels. IWM. Small caps are also flirting with support. My first target here around 150, 155. You can see there's some reactions, a gap right there, and they broke down from the flag as well yesterday, which is right here. I don't have it marked as such, and we're just back testing that. So right now, despite this kickback rally, which seems, might, again, I'm sure it has some people guessing. Look at IWM, just recently went positive. That's yesterday's close, green on the day, but since got rejected. So I'm sure that made a lot of people second guess a short on IWM. And like I said in the trading room, I know all of you, some of the silver members don't have access there, but I said that, hey, we're getting stretched in the near term. Stretch meaning oversold. I'm on a 60-minute chart. See the RSI buried down below, way below the it hit as low as 20. Anything 30 or more is oversold. We haven't been oversold since when? Back since the market bottomed. So this is what I mean by getting stretched. And what that means, if you weren't already short coming into today, even if you were short and you wanted to add, adding now is not nearly as objective as it was back here. That's why I like to add early. Sometimes I'm usually, not always, but usually I'm a little early on trades when I'm trying to call trend reversals. And why do I like to be early rather than late? Well, because you can be early and when the markets, when the momentum is slowed and there's very little downside risk. So it might take you a couple weeks and you're only down a couple percentage points. But then, since stocks tend to fall faster than they rise, especially when you get sell signals in a trend reversal, you don't want to be late, because if you try to chase an entry, well, now the odds of a kickback rally anywhere along the way, a pretty sharp one, are there. And if you happen to buy right before the kickback rally, you're immediately underwater. You start to second guess the trade. You don't really have many objective levels. Like today, for example, you could have shorted the gap down. You still could, but your stop objectively really should be not too far above that 155 level. All right, TVIX hit our first target, actually gapped above it, and the policy on all the active trades on the site, whether it's a short or whether it's a long, let's say, or short, and if a long gaps down below my stop, then and opens below it, then that's the trade I use to calculate the loss on the trade. In this case, the stop was low. I raised the stop today on that trade, so we gapped above T1. If you have, if you were targeting T1, which was before it was 34.30, and you had a sell limit order to sell at 34.90, 34.90 I said, sell at 34.90, and your security gaps up, as this one did, to open at, well, there it is, 35.80, that's when you fill. Limit orders are filled always at the limit price or better, never worse, only better. And they convert on a gap or a opening gap, they convert into market orders. So that's where you would have been filled, and that's why that target was revised. In other words, nobody was filled at 34.90 today. These are the next targets. Oh, and on that, yeah, look, just as the markets are back testing resistance, look at that was, I left these lines. Sometimes I'll do this. You guys will note my targets always say T1, T2, T3 on the official trades. Sometimes I'll put the lines up so you can see where the actual support or resistance levels are. So in this case, 34.90 was resistance, and I had a pretty tight target because I figured that one would come right up to. You can see as we get up here, I have a little bit. I may revise this one. I have a couple cents below that resistance of 39.80. This one's 45.73 is the actual resistance. There's my target. And like I said, this trade has the potential, if we get some meltdown selling or something, let's go one day at a time. Let's see what happens today, how those bearish engulfings look on the weekly, assuming we get them today, and then we'll see what happens tomorrow. I'm sorry, Monday and into early next week. And if so, we see some more impulsive selling, I may very well extend these targets. And then most importantly, whatever I do doesn't matter. If you like the trade, you think the market's going a lot lower, you think there's a chance for a sharp drop, remember when the VIX can run, when the market drops, VIX can really run. I mean, here's that last move down here in December, you know, darn thing went up 153% right there, 150 roughly in that run. And finally, we'll just wrap it up here with SOX, semiconductor active short trade. You know, you had a trend line here, which was probably the most significant one, broke down. But we had, you can see S1 again. Sometimes I'll give you those levels. S1 meaning I colored it blue because the trend line was the first support level. And so when that broke, you had a little move down to the S2, which is price support, and that was the last and final most significant level right there. A lot of reactions from this one here, reaction from below right there, down to all these reactions there, breakdown. So at this point, we're still a little shy of the first target. I can tell you, it would be if we get a kickback rally, it would be objective to add up to back to a kickback to S2. With a stop probably not too far above it. I'll leave this stop as is for now, and if and when T1 is hit, I may lower that stop. But again, you use your own stops depending on where you think things are going, and also depending on your specific entry price, your preferred price target. Like if you look at the FAQ page, the reason I list different price targets, there's dozens of ways to trade. Some people like to book full profits at T1. Some people like to hold out for the whole thing. Some will take partial profits along the way at first target. Some will game a bounce and then recycle back in. So again, you trade these as you like. But as of now, that is still my final and preferred swing target. And I am very much open to extending this trade and starting to go for some, you know, like I said, instead of singles, which we're looking at now, trying to bat a single on this one, the potential for a triple or even a home run or a grand slam, because this is pretty darn bearish price action. This was a big part of why SOX was added, of course, along with everything else in the broad market. This was a downtrend line, 1, 2, 3, 4, popped it, and then fail. That's even better than failing there because that is a bull trap, a false breakout, and it was an island top as well. So there's just so much on this chart that speaks to me that says this was a top, major inflection point, not just a stopping point for road to new highs. Still work to be done. There is a lot of support below that will come into play. And but as of now, like I said, everything I'm seeing here, especially the impulsive selling following those bearish developments, opens the door for this to be a much longer term swing trade. And I've done many videos on the semis in the past. You can check out the new search function. I put up a search icon in the trading room. You can type in SOXX or use probably the best thing to see my videos on the trading room. Hold on, I'll show you. Here we go. Not just the trading room. There's a search icon in there, but I've added under resources now in the top menu. There's a whole new support center that's just been built out. A couple of the links are still coming. I'll be working on those in the coming weeks. But if you come down here to the bottom, there's two ways to search uh, for what you're looking for on the site. Using this one, select by ticker tag. If you type in, do it relatively quick and it'll jump down to it, SOXX. And then it'll jump down to socks, or you can scroll. You can see how many tickers I've covered over the years. There's a lot of them. But if you do that, then where were we? SOXX. And then it'll load all the front page posts. So this will have the videos that I've done, trade ideas, any mentions of stocks. And then of course there's the other option you can do is the new search function. Don't use this. This just searches the support page. Go to right down here, or there's one in the trading room, or on the main menu bar on the site up top next to the little user icon. And then you can do the same thing, but this will show you a trading room post as well, because a lot of times I'll make a mention of stocks or post an update in the trading room, as will other members. So you can just scroll. Again, I'm using my scroll wheel on the mouse, much easier than grabbing and trying to drag. So you can just go across and you'll see any mention that I have of SOXX when you look for my Gravatar, or whatever they call that image thing. All right, let's wrap it up here, guys. Again, I'll do a follow-up at the end of the day, kind of a closing wrap, and then let's see what happens next week, because again, this is where where the market could show its hand and give us some more clues to whether this is just going to be a tradable correction that we want to buy and get long for the next run up, or do we want to hold these shorts, give them a little room, and then try to swing for the fences on the way down. And again, we're not going to, well, there's not any one single thing, but again, today's bearish engulfing will help, but next week to see what the market does has the potential to even reaffirm that further. So we'll be on watch for that. All right, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.